Hello, Warriors. How's everyone doing today? A couple of things in the dollar took out that support level, but now it's trading right around the 61.8 level. How are you doing, Alexander, Ingmar, AJ, Kman? How are you? And Steve and Ingmar. Uh, yeah, Bitcoin's like the S&P. It just keeps on running. Ryan, hi, bro. Hugo, Alexander. Okay, let's start with the dollar.
And hey, Coach, good morning.
Yeah. Good morning. How are you?
Good, good. One of the things that you might want to discuss right off the bat with these guys is the dollar yen that's approaching 146, but more importantly is the trade deal between the U.S.
Yeah.
and Japan. And Ashiba, there was rumors that he was going to step down last night, and then obviously while we were sleeping, he denied all those rumors. So we've seen
Yeah.
a lot of volatility in the yen.
Yeah. Well, the yen, and I'll ask these guys, and you, great call when you were talking euro yen. I believe it was yesterday, feels like a week ago.
Yeah, right.
So unbelievable, but yeah, so we're approaching some important levels here, and what keeps me constructive, Blake, is this at the highs, confirmed, this bear confirmed highs and lows usually don't let me down about that it's just a high and not the high. I'd say that, I didn't do any fib work, but I think this 45 and a half level will hold. And I still think there's a chance because I don't think yields are just going to collapse from here either. Maybe get a right shoulder on 10-year. But this was something that talked about for a few days and even yesterday that felt like a week ago that each bounce off this support level in the dollar, especially this, wasn't even a bounce, it was just a hold.
Webinar.
So you're a little late. We're going to dock your pay, whoever's announcing this
Oh,
webinar.
that yeah, that was Forex Analytics telling
Yeah.
him it was online.
Anyway, so here we are very close to 61.8. And so what's more important, this breakdown or the retrace? And yesterday it was this, and I think now you have to start thinking about if this wave was real, then you start looking at some retraces. And also what's interesting is Aussie went from worst to first, broke out yesterday and we're on our way to new recovery highs. Euro looked like it was breaking out yesterday. Maybe it holds its breakout. I don't think it's such a great reaction today. So I'm going to ask, first of all, Ryan, you haven't talked to you in a few weeks. How are you?
Who are you?
Anyway, no,
Who are you?
anyway, yesterday was like the movie, The Longest Day. So, anyway, your view on what's happening politically there, and then your technical view on the yen, where do you think that this is a break to buy, or is that a significant top up there, 49? What do you think? Hello? So.
Yeah, hello,
Uh,
hello. You
Ryan, we
there?
lost
Yeah.
you.
Oh, I'm back.
Okay, got it.
Yeah,
So,
just
are there levels here that you're looking at?
yeah,
Is this, go ahead. Sorry.
it's another day where you have a bias 1 minute and it all flips around the next day. I was very bullish sentiment on dollar yen. Thought we might even be going up to the 150s, but finally
Yeah.
we got a trade deal and looks like things are flipping around. It's one hump of many that Japan's just got over. But this is looking a bit more dollar than anything else this morning because
Okay.
everything seems to be dipping. Um, the break of these lows around 30, 146.30 could be significant. It could lead us down to your moving average at the very least,
Yeah,
maybe into the 145s.
there's
Yeah,
also this low here.
Bit of
which
confidence
was a
there.
pullback. Yeah. Okay, so anything actionable on the currency board for you? Are you convinced about the commodity currencies coming to life here, like Aussie? It's hard to chase it.
Yeah, you can't chase it. It's keeping its pattern going though. The last high was higher than the previous high. This high is
Yeah,
previous than that high, higher than that previous high. So it's
yeah,
keeping the trend that we've seen in play all year going. Whether it's got enough legs to motor on. Blake mentioned in the chat room, be careful because we've been up at sort of highs and then failed previously. So definitely wouldn't go chasing it. I think if you get a confirmation here, if we break 66 and hold it, then that might be the move to try. Euro dollar, it's up, but it's failed once again at 117.50, which was
yeah.
the big level on the way up. Then it was support. Then it's been resistance since 6th of July, and
Yeah.
here
You
we are
think this
again.
is just profit taking in front of the ECB?
I doubt it because there's not much expectation for the ECB. But you could be right. Could just see a bit of people taking a bit off the table ahead of tomorrow. But it does mark a significant step down from those 118 highs. We're not going back there. So at the very least, we've got a bit more of a balanced market in the euro.
Okay. I guess some could view this as a failing rally. I do think people probably try and buy it back here around 1670. There's some confluence, but my bias is today is that if you miss this whole wave and the dollar has bottomed, that these are probably the levels. Pretty good shakeout day without much follow through so far. Of course, it'd be nice to see it recapture 97.30 this breakdown, but I'm gonna give it a try and piece here, and if it gets down to 78.6, I'll try another piece. So that's the
I'm
way I'm
giving
handling the dollar. Go ahead.
Yeah, I'm keeping an eye on dollar CAD at the moment because that could be a real significant juncture.
Yeah, I
If
mean,
you just
we
if you zoom it out a bit, maybe onto the daily, we've had this downtrend all year,
yeah,
and this is the first time pretty much in all that move where we've had a potential significant bottom forming. So those last two lows, 135.40, 135.50, 60. If those hold again, then we could see a significant bounce. But if it
yeah.
breaks, we're legging lower.
Then we're looking at 4.5, aren't we?
Yeah, the least maybe.
Yeah, that was one of the levels that people were talking about when we held 5.5. Four and a
Yeah.
half was a big level. Um, cool, bro. Anything else you want to comment on?
The only thing I want to mention, just for those in our chat room, we're testing a new tool out. I can't tell you what it is exactly, but I'm very, very excited about it, and some of our traders are quite excited about it as well. So if you want to test out
Why should
tool,
they be excited, Ryan? Because
because
it does what?
I can't tell you what it does because that would be spoiling it.
But it's tools that are only available to who?
To people in the chat room at the moment. And it's part of our transition over to trading analytics. So this could be something we're carrying on over to there. And this is probably, I'm not trying to big out too much. This is probably the closest thing we retail traders got to institutional level analysis or metrics.
That's what I was looking for.
All
Very good.
right. Yeah, very cool.
So, and don't forget, if you want to try it, we've got a 40% sale on for joining the chat room, and you'll get access to that, and you get to have a look.
Okay. So how's the hit rate on it so far?
The hit rate, I can't tell you. I'll give away what it
All
is.
right. All right. Well, that's the major question most people will be thinking about.
It's better hit rate than Jim Cramer. Put it that way.
All right. Well, then I'm in. Nancy Pelosi, well, she doesn't need it, right?
No,
She's
it's
got
not as good as Nancy Pelosi.
okay. All right. All right. Kman, good morning, bro. How are you?
Morning, Dale. Morning, everybody.
So you got your new high in silver and it's still
Yeah.
pushing.
Yeah.
You still holding?
Yeah. Well, I've actually taken a small piece of my very long terms off, just in because I wasn't sure that it was going to push through yesterday, and
It was a
we've been
pretty
talking,
good intraday break that we had yesterday.
yeah,
We
about
were off of
the
what,
prior
about
high.
40 cents before it came back. I think this was a candle. Yeah, so
Yeah, my long term, my well, in on the long term, the really long term, the next level really is 41 and a half for as long as
okay.
we stay above $35. But the interesting thing today again, Dale, if you go on to gold, remember yesterday, the day before, it was actually happening while we were on phase.
The
That
US buying?
the
Yeah,
US buying gold, heaps of gold.
yeah,
So this is something that I'm looking at again because gold has definitely been dragging silver in its wake as well. Um, but will we get a third day in a row? That's a big question. If we don't get it, then perhaps there's a bit of room to start correcting. But yesterday was again one very heavy buying session in gold, and that is one of the things that I keep a very close eye on. And as you were already saying about the commodity currencies or the antipodians or podians, as you were saying, yeah, they went from hell to heaven on the
yeah.
back of those trade deals. Also, discussions still ongoing, as Besson said, and Trump apparently last night about the talks going on with China still as well. And both the Aussie and the Kiwi went from
Yeah.
laggards to leaders. And yeah, that was actually the most impressive moves that we had.
Yeah,
I'm sure
definitely.
Blake is going to show it, but a few of us in the room are short Euro Aussie from yesterday again, or
Okay.
adding to some shorts for some, and those are a couple of the real big movers there. And they will trade on the back of risk. Okay, I mean, the equity markets are higher, trade deals being done or in the pipe, and that's something that, especially that for both Aussie and Kiwi, both Japan and China are also big trading partners, not only the US, right?
Okay.
So they both of them like it very much. So monitoring that quite closely.
Look at the difference between the SPOOs and the Qs. Quite a big
Yeah.
difference as far as the recovery. So, let's face it, the MAGAs, even though there is more bifurcation, they've led it both ways. They led the mini crash in April. They led the recovery, and I don't think it's a good sign that S&Ps are making new highs without Nasdaq. So
Don't
that's a
we have
caution.
results? Don't we have results in the Nasdaq stocks today?
I'm sure. I mean, we're in the heart
Yeah,
of earnings season. So yeah, we could get some
yeah, uh,
blowout numbers to change everything in a
yeah,
heartbeat.
Tesla
Yeah.
and Google,
yeah.
which have
Exactly.
been
Thanks,
really
Blake.
underperforming.
Yeah,
Okay.
they will probably be the Nasdaq drivers today, right?
Yeah.
Yeah,
You
yeah.
have you have a vibe on yields here?
Um, no, my friend. It's you know what? I was a tad surprised that with the lower level of because it's a big deal, yeah, between Japan and the US. Yeah, I mean,
Right.
you can turn it however you wish. I mean, the fact of reaching a deal is a big thing. And then I was looking
Yeah.
at a bit of lower tariffs, investments in apparently in the US as well by Japan. I still don't know how they're going to do that one. And I was actually thinking, okay, maybe that's going to put just that little bit of extra weight on the yields, but they remained extremely still. I think we have to. We're in the middle of that 420, 450, and then yeah, what's
Yeah.
the question is what's next?
Yeah, my
The
my first impression is, I mean, this looks like, a neckline.
yeah,
So be alert if we get a pop in yields. Maybe we're forming some type of head and shoulders top
mm,
here. And then if
yeah,
we
we
take out 430, then we're talking back down here to 420.
yeah. We have a
So
20-year auction coming. We have a 20-year auction today, but it's not big in amounts, and it's been really hyped up since Yellen was there. I'm not sure if that's going to move the needle too much. Tomorrow we have the tens, which is likely a bit more interesting, fact for me at least. Um, yeah, so their yields could maybe move a tad, perhaps, but we really, I think for it's actually pretty good also to see that the bond market is not overreacting on every single headline anymore, because
yeah,
we're coming out of a period where you could do like 20, 30 BPs in a day on the tens or whatever. It's
yeah,
just too much for a bond market to continue to cope with. So I mean,
yeah.
let real headlines or data tell us now where the yields are going to go. But I don't rule out that another move higher, Dale, on the back of maybe more spending and stuff. It could be that we are going for a ride higher again.
Okay. I will say that the higher low here, they really had a chance to put the pressure on
Mm.
all the longs, and it could be A, B, C, like the Head and Shoulders top that might be developing in 10-year. Maybe we have the opposite formation in TLT developing here.
But we
So I wouldn't be short,
Yeah, but we
say.
were talking about that a few sessions ago, yeah, that we maybe start to try and form kind of this broader range.
Yeah.
And it does feel like, because we're coming back regularly back to the main traffic zone of this range. Could be that we are in a bit of a range building thing there, and stabilize just that bit on the yields in the same time.
Okay, well, I would say TLT is the poster child for range trading.
Mm,
What do you guys think, huh? I mean, look at that since 2023. And then it's even compressed more since, this big down into we've just been going sideways, sideways. So is it a base?
Funny
You
thing though,
know,
if you look at that chart from starting actually in
yeah,
2023, every
yeah,
high has been a bit lower than the prior one, no?
yeah. So, well, who is it? Louise Yamada? I swear I said this, I don't know, before it became famous, but the longer the base, the bigger the move into space. So,
Okay.
anyway, this is a hell.
I like that.
I mean,
Uh,
yeah,
yeah. So
put it
anyway,
put
Speaking
it
of head and shoulder patterns, I got a really good one for us to look at today.
take it, buddy.
All right.
You
Well,
were on deck anyway.
all right. Well, this is something we talked about on the week ahead video, and it just because Google is reporting, and this is going to be really critical resistance. We're at the 78% retracement. AJ was just talking. There's a lot of call activity in Google, so we could definitely break out. I wouldn't be selling it right now, but if we do reverse today following the earnings, remember Google's one of those. It is one of the stocks that is not hitting all-time highs. So it is worth noting today. I would say if Google gets back below 182 or so, I mean it's out. I know it's Alphabet, but I'm old school. I guess still call it Google. But anyway, if Alphabet gets back below like this 180 level, I think that's where it turns bearish. Speaking of earnings, you also have Tesla after the market close, and you can see Tesla is this is a nice compression triangle that's developing that's going to yield us a decent breakout. A lot of people have been buying Tesla, especially with ever since Musk has come back, which has been basically since here in April. You've seen Tesla. It's been bid, but it hasn't played. It's either got a lot of catch up to play, or it's going to start rolling over. And maybe if you look at Tesla's sales, especially in Europe, they've just fallen off the cliff. Actually, globally, I would say they've fallen off the cliff. So that's something I know. Tesla's not just an auto company; they're a robotics company. They're an AI company. They're all they're Tesla's a lot of different things, but it's really not looking fantastic right now based on what the market's doing. But I want to go back to the yen really quick. Obviously, the U.S. And Japan have cobbled together a trade deal, and a lot of automakers, especially in Japan, are doing better. If you look at some of the Japanese stocks, but the yen has also strengthened as well. At first, it was weakening when there's you can see this is when the deal was announced. This is an hour. This is when I was going to bed last night. We spiked up. We came back down. There was some rumors that Ishiba was going to resign. Actually, two different papers rumored that he was going to resign in either this month or next month in August. And you saw the yen start to weaken, and then obviously there's been a denial ever since the European hours that Ishiba is not going to resign. So here we are slumping once again, and it's not just the yen. I mean, you take a look at the JGBs and look at yields on the Japanese 10-year, and here let me find them. Here we are, right up into to highs.
Wow.
So Ryan, what do you make of this right now? I mean, do we buy yen if the JGBs, the 10-year yield just start ripping and breaking out? What do we do here?
Well, that's sort of counterintuitive to what's been happening recently when yields have gone higher. I mean, the Ishiba thing is, he said after the election he was going to stay on until we got a trade deal done and some other domestic legislation and bits going on. So it's pretty much a done deal that he's out the door anyway. It's just a question of timing. So that's not really a story. It's more important as to who potentially comes in and replaces him. Are they going to stay on the same party line? What does it mean for the Bank of Japan? All that sort of stuff. Are they going to agree the trade deal? Is it going to pass? There's lots of stuff still to come. But for dollar yen, as I said, this is feeling more like a dollar move because you only got to look at all the other pairs, and you're seeing dollar weakness, particularly strength in the commodity currencies. So yeah, this could be heading much lower. My next real big level is 144.90, 145.10, which is a big old level that we've been at previously on the way up, on the way down, and turned around it quite often. So that's my next biggest level.
Okay. So down at 144.10, which would be somewhere way down here.
145.10.
Oh, 145.10. Okay, which would be near the 618 retracement.
Yeah.
Kman, what's your gut instinct here with yen? I mean, it's I mean, very sloppy price action right now. I was just talking about it in the chat room where I'm looking to buy it. Are you looking to sell yen down here, meaning buying, dollar yen or buying euro yen or whatever? Or are you looking to play the opposite now?
I'm not. I'm still not a yen buyer in the long term.
Yen buyer. So you don't think the dollar yen's going like back
No,
down
that's
to 40?
not what I said. That's not what I said. I'm not a yen buyer in the long term. That doesn't mean that I'm going to sell it right now today. I still think that, and I've got a big question around that 550 billion investment fund, which Trump was actually saying that the US is going to manage it and keeping 90% of the profits. It's funny that no one in Japan really said that they were, yeah, we're going to give the US 550 billion of our dollars to play with. Because if you think about it, if you want to invest $500 billion into the US, is that not bullish dollar yen? Because you're going to have to get those dollars from somewhere. Or okay, they can always use whatever they got in the bonds, or they can actually go and borrow the dollars, obviously. But no, I think in the longer term, I'm going to say in long term, give me 142, I buy again. But in the shorter term, I think we need to let this play out a little bit, because there is a lot of positivity for Japan just to have the fact of finding a trade deal. Where I'm also, and then as time goes by, where I'm not convinced that the yen is going to stay strong, is that I still think it's going to be a political mess over in Japan, and I really think so, because they can't decide upon anything without a third party over there, and who says third parties over there are saying more fiscal, more losing the fiscal leash, and that could be underpinning the Japanese yields and weighing on the JGBs, but it's not necessarily going to be yen positive. So short term, I want to watch it, but longer term, I'm going to look for levels to probably go short yen again.
Okay. All right. So maybe like Ryan, maybe, move down to 145 and change, or maybe 144 and
Yeah,
change.
or something like that.
Something like that. Okay. All right. Very good. And today we don't have a lot of US data. We've got like existing home sales, I believe, are coming out here in just a little bit. Which is, something that I'm as an American, I'll be watching, being a homeowner, just like, because I know people in the US are very sensitive to what's happening in the housing market. It is markedly slowing down. So I think we need to be paying pretty close attention to that. But really,
And
tomorrow will be
any
the big.
price drops out there in the desert, Blake, or
I don't pay really close attention, and I haven't really and usually the people that I talk to, I haven't summertime, you know how it is, Dale. No
yeah,
one, we don't go out.
right.
It's like the opposite if you live in the
Uh,
frozen tundra in the wintertime and up
yeah,
near Canada. It's like you don't leave in the wintertime,
yeah,
your house. Like in the summertime, we don't get out much, and we're not
yeah. So,
constantly out in
yeah,
dinners with friends and stuff. So,
yeah,
I haven't had a good beat on it, but I know summertime's always slow anyway. I mean, for
yeah,
us, no one's
yeah,
out looking at homes in Arizona. It's blazing
yeah,
hot, so no one's doing
yeah,
it.
yeah.
So
Okay.
I believe the housing market's really slowing down, though. I think in certain hot markets it really is, especially if you look out in Texas.
Yeah,
Uh, there,
Austin got
yeah,
killed. Yeah,
Austin, Dallas, they're really starting to slow down. There's a little bit of speculative nature out there, which when property taxes are as high as they are in Texas, I'm very surprised to see that. But anyway, we'll be keeping an eye on that. Tomorrow's going to be really important with all the PMI data out of the Eurozone, the UK. We're going to have US. We're going to be talking about US exceptionalism or US unexceptionalism after tomorrow. Plus, we have the ECB decision tomorrow. So that's going to have
yeah.
a little bit of an influence on the euro. Now, I do want to talk about this because I just mentioned it in the chat room. Oops, this is the trades room. I want to go, I want to, just make sure I highlight this for those of you that are chasing the Aussie higher. And Ryan, you made mention of this just a moment ago. I'm like, dude, if you're chasing the Aussie higher into this resistance, you're asking for trouble. Every time it pokes its head into new highs. And don't forget, traders do have ADHD. And just last week, we had the Aussie jobs data that came. Their unemployment was 0.2% higher than expected. So you got a false breakdown, led to a breakout. If we have a false breakout here, it's going to lead to another breakdown. So I wouldn't be chasing it up here. And the other thing regarding that is if you're looking at copper, which I know I just highlighted it over here as well. Copper's near the highs, but we haven't broken out just yet. So if copper stalls at these highs and the Aussie rolls over, and plus, you look at the dollar and the euro looks a little frothy up here around the 117.50
Yeah.
to 20 level. And Dale, I do want to mention this. This is a chart that, well, I tweeted it yesterday. I'm looking at the dollar index as a, whoop, I just skipped over it. I'm looking at the dollar index as a big head and shoulder pattern, inverted head and shoulder pattern. The head
Okay.
being at the 14-year trend line. We stopped at the 618 today and
Yeah.
yesterday.
Yeah.
So if we start bouncing from here and we get back above 98, I wouldn't want to be short the dollar.
Great
So
look.
yeah, so it's just
I
something
like it.
to, yeah, I mean, look, Dale, we've talked from months ago about the dollar index reaching 96. You were like,
Yeah.
man, we're going to 96. And I'm like, yeah, that's that long-term 14-year trend line. It wouldn't be
Yeah.
surprising to me to see a head form down here, get a little bit of a reversal. And it's just like anything. I think the dollar index is going to break. We're going to break down at some
Yeah.
point, but that doesn't mean if you're going to hit a big level, it's probably going to be like a couple of times before we can actually break it because it's
Yeah,
big.
I like where those moving averages are connecting on that chart right there. That's around the 102, 103 level. That's a target for a bear market rally that I've been talking about for a while. So
Yeah, I mean, I would be really impressed with that. Jim Welsh keeps talking about that we're going to get all the way up there.
105.
I don't,
Yeah.
yeah, and I don't see it, but anything can happen. I mean, it's hard to see, but then again, the world is moving at such a fast pace right now that anything can happen at this stage in the game. So I
Yeah.
don't know. I don't put anything past what like if you think you think the market can go there, it probably can for reasons you have no idea. And that
Yeah.
is me too. Hey, I know Mish is going to be here. And Mish, guys, if you don't know who she is, she's amazing. She's macro analyst. She's been around these markets. Her and her husband, longer than most. She's very, very, very great analyst. So make sure you guys stick around for Mish. She's one of my favorites, and she's much better, much easier on the eyes than Dale and myself
Yes.
and the rest of our team for that matter.
Oh,
So.
come on, man.
Hey Dale, you're looking quite snazzy today. I
Uh,
think you dressed up for Mish.
I,
Have you
I,
found her yet?
she keeps rejecting the promotion. It's only for 30 minutes, Michelle, that you're promoted here. So, it has nothing, no big business decision. Please accept.
I'm gonna see if I
Thank
can
you.
I can promote her too. And so
There
Michelle,
we
just
go.
just accept
There she
the
is. She's
role
coming.
of CEO today. There you go.
Yeah.
Sorry, didn't mean to be fashionably late. I didn't see the.
You were early.
I am.
You were early.
I was.
Uh,
Yeah. Yes,
Yeah, you're like me. If you're on time, you feel late. So it's great to have you, Mish. Team, great half hour of insights to share with the community. Appreciate it, Kman, Ryan,
Cheers,
Blake.
amigo.
Thanks,
Yeah,
coach.
all right. A lot of great ideas. So played back, and we're going to get even more great ideas from Mish, like every time she's here. So good to see you, my friend. And how's life been treating you? And wild markets, we've been through, I don't know, so much since you and I last spoke. I mean, the crash into April, the recovery to new contract highs. Commodities, especially the PMs going nuts, copper going nuts. And I know you're a commodity bull and have been a precious metal bull for a long time. Any charts to share today?
Now, do you want me to drive or are you going to drive?
You drive because they
Oh,
are always in my car every
oh,
day.
okay. All right. Well, I didn't know that. So give me a
Okay.
second here because I have to get, unfortunately, I have to get my,
Yeah.
let's see, I have to get my charts from
All
TradeStation
right.
because I
Okay.
wasn't prepared for driving. But I mean, I'm
Okay.
up on my TradeStation. I just have to. It's a
Sure.
little funky here
All
on
right.
my.
Well, I tell you what,
I
I'll
got
take
it. I
it.
got it. I got it. I got it. I got it. I got it.
Okay. Okay.
So what I'm going to show on my TradeStation, it's going to be a black screen, but it will have everything. And it's a Forex chart screen. So now where's my share
Yeah.
screen?
Down at the bottom.
Got it. Okay. Can you see that now?
Beautiful. Yeah.
Okay, good. So, all right.
Okay.
So
So
I have Ung up there because this is my new obsession is natural gas.
okay. Yeah, it's really gotten hammered. So you're looking for buying opportunities in that gas now?
I am because one thing I discovered this year in particular with commodities, especially after the April sell-off, was that buying weakness is actually less risky when you get to a certain level of weakness than trying to chase strength. And then once something is really established, like for example, let's use, I mean, I know you're going to talk about, we want to talk about metals, but I want to put this up, uranium,
Okay.
right? So
Okay. As we're seeing your screen with all your recent connect team viewer is what I'm looking at right now.
oh, you're not seeing, oh, because I moved it
Yeah.
over. Let me move it back over here then. How's that better?
Yes.
Okay, sorry. I was
There
moving
you
it.
go. It's
All right, so
okay.
I'll have to look a little bit to the left, but that's
Yeah.
okay.
Yeah. Uranium's been parabolic.
Well, you know, this is a type of market right now. It's actually been a lot of fun, and it's been a lot of fun because there's a certain level of headline transparency that if you eliminate any kind of bias or opinion or, you know, thoughts of whether you love or hate what's going on in the current administration, and you just focus on what they're saying, that's where the opportunity turns out to be almost easy. And I hate to say that because I'm sure some people aren't finding it easy, but it's certainly a new paradigm for me. I've never seen anything like this except in Trump 1.0 in 2017 before we got to COVID. So essentially, in the beginning of the year, when the administration started, he was talking about uranium and how he was all for clean energy and using nuclear energy. And so when we had this April sell-off, and this is what I'm talking about, we'll get back to natural gas and silver and gold, that's a whole other animal. You know, I saw this sort of big dump here in April on the weekly chart, and then 2 weeks later, it started to pull up again, and we got long at about 22, 23, and we've sold half of it since, but we're still sitting with a trailing stop on half. And the reason why I'm showing you this is because, you know, everything looked really, really bad at that
Yeah.
point.
We could have bought anything in early
You could have
April.
bought anything, so it didn't exactly require genius. What's the
But
genius part, I guess, is that I've stuck with it because
no, the genius part is it was a relative strength leader. Really turned out to lead a lot of things out in April, and the percentage move, 100% move is not bad. The
right, and
S&Ps did
also,
not do that.
and the other thing that I look at before I make a decision to do anything is the real motion. So this is our market gauge proprietary indicator that measures momentum. And of course, the fact that we were all floor traders, momentum was easy to measure, right? It was a matter of smelling it, tasting it, hearing it, seeing it, order flow,
Yeah.
frenetic activity, prices starting to go crazy. You can't do that when you're sitting at a desk necessarily. And so this indicator really measures the red dots are the momentum versus the two moving averages that you see, which were very consistent. The blue is the 50 and the green is the 200. And then you have a zero line, and then you have Bollinger Bands. So what we look for, look what happened here, is that we got oversold, and then we had a mean reversion till we eventually matched with a price move, actually didn't quite get over the 50, and then it started getting over the 50. So even if you didn't buy it down here, you know, you clearly had an opportunity here. And that's the way we like to do things, is we like to see momentum giving us a heads up, and then the price confirming with a move over a major moving average. So
See,
let's
that's
go.
a great point, Michelle. You know, a lot of traders feel if they don't catch the first 5%, 10% of a move from a top or a bottom, that they're late. And what they really are is what it really is, you're getting confirmation. When you're bottom and top picking, you're, you know, really specking. And it's like a good lawyer. The more evidence you have for the case, the stronger the case.
Exactly. And it's also strategic, which of course a good lawyer needs is a consistent strategy. And
Yes,
so
consistent.
the consistency on the strategy is the momentum to give us a heads up. And if I see a divergence in momentum, if I see a bearish divergence, something is going up, but the
Yeah,
divergence is matching, and I'll show you an example of that, then I probably won't buy it. I won't chase it. If I miss it, so be it, right?
yeah.
So now looking at natural gas, by the way, so this is by the way. So we're not looking at the futures. The futures looks a little bit different. But what we see here is an island bottom, which is meaningless because the underlying futures don't have it. But still, it's an interesting pattern. And so if I look at my momentum, this was the low of momentum here when we made that low. Now it's coming in lower today. I think what they're saying, 14.15 bid at 14.16. So it's going to come in still above this line. This is the 6-month calendar range low. This is the July 6-month calendar range low. This is the July 6-month calendar range high. That's going to be super important when we get to talk about the modern family. But right now, if this holds, and this doesn't either make a new low in momentum, or it does and then comes back into a mean reversion, and you have this point to trade against, that's what kind of how I'm looking at it right now. It's getting into oversold. Could it get more oversold? Absolutely. But, you know, if it does hang out momentum-wise, hang out here and start to turn around even a little bit, the reason why I'm looking at natural gas is because there was a story today by Oklo. You know, everybody's been trading that stock. It's been so hot. And I'm just going to look at the story here so I have the exact information so I don't screw it up. But Oklo and LBRT partner to power data centers, natural gas now, small nuclear reactors later. So natural
That's
gas.
exactly what I didn't want to interrupt you. It's a bridge to nuclear, natural gas.
Exactly. And we live in New Mexico, right? I mean, this is the Permian Basin is right here, Texas and New Mexico. And all I'm hearing from a fundamental standpoint is that the drilling is going to stop. The refining is going to stop. Yes, there's a ton of natural gas. We know that there's a surplus, but nonetheless, if the producers don't want to pull it out of the ground or distribute it, that means they want the price to go higher. I was reading yesterday, my goodness, I can't even remember which oil company it is, but essentially they're saying, we're not going to drill, we're not going to do anything. We're just going to allow our cash to flow now until 2027. So once you start to get, this is the basics of commodities, supply and demand. When you have a lot of supply and low demand, things go down. When the supply gets cut off and if the demand keeps going up, then of course that's when you see the rally in commodities.
So I have to ask you, how many holes have you had Keith dig in the backyard?
The funny thing is where we live, we don't have a backyard. We have an arroyo, and the thing that lives out in the arroyo mostly is coyotes. But yeah. So you get my gist. It's like, this is why I like to look at things ahead before they happen. When I saw that story about Oklo today, I'm like, yeah, why is this trading so cheap? They're pushing this, who's they? I don't know, the proverbial they. But I don't want to spend too much more time on this because there's so many other interesting things to talk about. But this is the kind of opportunity that I will look for because I do believe that natural gas at this point is not at a price that the producers really want to push for it. They're not making any money at these levels. And the distribution is far more expensive. Look at utilities. That's the reason why XLU has gone up so much. So let's move on from there.
Okay. Great very good analysis.
Well, it's an analysis that can apply to almost anything. You know, it really, if you want to look at the way the market is behaving, as soon as we start to see more headlines like what I just saw with Oklo this morning, that natural gas is really something that's needed right now, nuclear in the future, then you know this thing is going to move. Now,
so the way you married the narrative with the technicals is really, really key. So you have bullish cases on both sides that you're looking for.
Exactly.
Got it.
So, now silver was very similar, except that silver seems like it was like ages ago, right? Because I've been talking about silver since 2021, really. And after we had, the big move down, the year of rising rates, it was pretty obvious to me in October 2022, it was the same kind of thing. I should probably make it so it's easier for you to see, but it's the same thing. It started to get so oversold. Look at the momentum. It broke that Bollinger Band. It broke at that point. It was the July calendar range low, almost exactly what we're seeing here happening with natural gas. And then the momentum started to improve. And then this took out the 50, then it took out the 6-month calendar range high, then it took out the 200. And really, once it got back over 20, you had some pain. This has been a bit of a pain trade back then. But nonetheless, there was conviction that eventually we would see what we're seeing now, which is much higher silver prices. And all you see is stories about silver shortages. Silver's needed in lots of things. Obviously, it's a conduit metal. And so here we are. Now, the thing I want to point out to you right now, as we get back to where we are in the present. You know, these are the kind of parabolic moves that we love to see in our metals. But look at the momentum. The momentum is better.
Confirming.
It's confirming, but not yet. You want to see a major gap in up over this Bollinger Band in momentum. Plus, this just finally had a golden cross in momentum, while this had a golden cross ages ago in price. Didn't stop me from buying, but it knew I was going to experience these sort of pain trades like in April. Got stopped out when it broke down under the 50 and then bought it back. You know, and so this has been not only the year of finding,
you know, that's
also
another key that shows you're a pro, because amateurs that got stopped out in April would come up with a statement like, I got burned in silver, I'm never trading it again, and they'll look for another market. Okay, I know it because I've seen it. But pros, if they still like the trade, are persistent about what their case is, and then can recommit to the same market, not at a better price than they got taken out at. That's another mental block, right? Oh, I have to pay more than I got stopped out at. I'll wait to buy it near the same price. So you're seeing a pro in action right now, everybody. Go ahead.
Well, I'm an active investor. You know, I think one of the scariest things, and certainly it could be years before it bites anybody, but one of the scariest things that we're seeing in the young traders that come up, and I see them on media all the time, is that they don't believe that the market will ever stay down. They only believe that they can sit through the pain and buy more at the lows and keep compounding, as they're calling it. And I think right now they look like geniuses, you know, and Nvidia at 86, people were like, oh my God, but most of the people that believed in that stock were buying it down there and buying the market. The retail space is the reason why this market, one of the reasons why this market is up so strong. Now you got the meme stocks joining in the rally. And so, you know, as an older person who's been doing this for a long time, you know, paradise doesn't last forever, but I'm not going to worry about right now, because right now we're in paradise. And so dips look like buy opportunities. And when crappy stocks start to do well like that, some people will tell you that's the end of it. But right now we haven't seen the end yet. So I want to get to, but what I want to tell you about silver, because people say to me, is it too late? This is not overbought. We have not gotten a big bounce through this Bollinger Band, number one. We're just clearing our July calendar range. We divide the year into January and July. And if this does fail the calendar range and the momentum starts to turn down, that'll tell me, hey, it may be time to take more profits, or at least put some kind of stop in where I don't want to be in silver anymore for now until the next opportunity. So as much as I love silver long term, as a commodities trader, you have to realize you're trading. You're not making an investment in a company like you would in Nvidia. So anyway, let's move on. Two things that are really important right now that I want to make sure I have time to show you. One is the small caps. Let's get this volume out of the way and move this up here. Hold on. There we go. This is the momentum indicator. So look at the momentum. We right now have the 50 below the 200, and we have the 50 below the 200, interestingly enough, in IWM. So what we're seeing right now is the momentum is starting to move higher, and we could get the golden cross in momentum at the same time we get it in price. But this is the January calendar range high, this green horizontal line here. Yeah. In January, we cleared it, we cleared it, we dumped. We made a new high. Everybody got super bullish. And then we dumped, and then we kept dumping. To me, right now, we have not really had a major breakout in small caps this year at all. And now we have a July calendar range high, which is very, very close, by the way, to the January one. So let's call 227 very key. So if people are asking for some kind of correction, to me, it would have to be either that we get through and fail, or we can't get through and start to roll over. Now, today we're at 224, almost 225 before the open. So we're going to open up like somewhere around here, but we still have to get through these levels. And we still have to see this momentum really scream. So that's number one. If it does, you know, it's kind of like what I said about gold at 2,100.
Let me ask you about momentum. Your dots with the recent high at that green horizontal line did
Yeah.
not make a new high. So is that a divergence?
Yes,
Uh,
exactly
okay,
right.
so that's a warning signal too, right in here.
Right, but let's look at Granny because Granny looks a little bit different. So Granny, my retail,
Yeah.
is now popped over the Bollinger Band. It had a
Wow.
gold cross, by the way, at the same time it did in price, where the 50 crosses over the 200. And yesterday, XRT wound up gapped.
Breakaway gap.
Breakaway gap over the 6-month calendar range. Look at this. In January, it peaked out for one day and then could not sustain. This is when everybody was so bullish and I was saying, nope, 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 nope. This does not look good to me. The consumer has to be in the game. Here's your tariff scare. So now we have a new tariff scare coming, but not so scary, right? But
Yeah.
I would say if we can hold up here, I'm pretty sure IWM will finally follow in kind. It doesn't matter to me. The consumer in the game is great. If you want people to go out and spend money, they don't care about inflation. They don't care about tariffs. It's a good sign. Then you have to figure out where they're spending money. That's a whole other thing we don't need to talk about today. But if it cannot hold above here, and that exact number, by the way, is 8170, and starts to roll over, and IWM can't make it through, early warning sign. And of course, in the trilogy of the inside sectors, as Druckenmiller would call them, let's look at IYT. That's really underperforming. Look where we are to the calendar range. Yet in January, this thing looked like it was going to take off, fail. Looked like it was going to take off, fail. But look what was happening in momentum. We never got through that Bollinger Band. We did for like 1 second up here, and now we're back below it. So we have to be cautious until you start to see all these areas firing up. I mean, interestingly enough, let's go to our sister semiconductors, right?
They're the leaders. They were the leaders.
They were the leader, but look at the momentum. It never, when it made a new high, momentum did not. Momentum was starting to climb down. So we never actually, let me move this over. We never actually got through the 6-month calendar range high, and now we're rolling over. Maybe it's the opposite of what we saw in January, although this thing popped through and that had that huge gap. This was the DeepSeek gap, by the way.
Yeah, I remember. Yeah, that was it.
That was it. So, I think you have to look at it like that, right? Look at what's happening in the momentum, look at the July highs, and then see what's flowing through. And then there are certain areas, of course, that are screaming through these highs. And those are the areas you want to look. So that's kind of my macro picture. We can go to something more specific, and don't forget about the natural gas. Watch to see if that momentum doesn't sink, how oversold it gets, the mean reversion, and I think that would be the opportunity. I may be early. I tend to be early.
All right. IYT, Mandy, is the transportation index.
Oh,
You're
I'm
right,
sorry.
Glenn.
Yes.
That's okay.
Yeah.
Great presentation. I mean, plenty of pearls. Do you have a view on bonds, Michelle? I mean, they've been range bound and sideways. Recently, we put in a higher low on TLT.
By the way, this is energy, by the way.
Okay.
Energy went right down to the 50 on momentum and popped yesterday. Here's your 6-month calendar range low. And here we are trying. Yesterday, it cleared and got over the 50, which, by the way, is also on an upward slope, which is good. So to me, another cheap play right now would be a move over 86 in XLE. You have such a tight stop, you get out under here if you're wrong. Okay, so that whole energy space is so undervalued because of oil and gas compared to, let's say, uranium and even solar, which has done TAN, which has done so much better. Look at where TAN is. TAN gapped through the 6-month calendar range. The reason why I started to love TAN was look at clear the 50 all the way down here. The momentum was starting to improve right back in here, and we had another test of the 50, but we never tested the 50 in momentum. And now we are on new highs and a new high in momentum. So, well, not new all-time highs.
Even though subsidies have been cut.
Exactly. Now, of course, you have to be careful because you don't want this to fail back underneath that July range high or the 10-day moving average. But, this is, again, illogical because everything was against solar and everything was for oil and gas. And oil and gas is certainly under pressure, and solar's been doing really well. So, that's the logic of the market right now.
It's a Michigan American.
I'm not sure gonna market. So, the last thing is I've been talking about this vanity trade, the new thin economy, and I think if I have any time left, this is really, I was been talking about Ulta on the media a lot, and people were like, oh yeah, she likes Ulta, big deal, blah, 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 blah. But look at Ulta. Now, same thing. We didn't make a new high in momentum, and we just did here. So I don't know if I'd be chasing it up here, but it certainly gave you so many opportunities to get into it. Here's your January. Here was April. Maybe I wouldn't have bought this one in April, but I certainly started talking about it over here when it cleared over the 6-month calendar range, January. And now the momentum was doing better, everything. Now up here, it's a little scary, but let's look at some of the other things. People keep asking me about the diet drug. So here's Novo Nordisk, right? So Novo Nordisk is been kind of a heartbreaker. But look at your momentum here. Look at your momentum.
It's turning back up.
And the 50 is over the 200.
Yeah.
Here's the 50. Here's the 200.
You could risk the April lows and buy the thing.
If you really wanted to sit with this, if you believed in this, now, of course, this has been a little bit nervous, I think, about the tariffs for pharmaceuticals. But nonetheless, this is where I get like, wow, look at that. Momentum's great.
Yeah.
This thing in the price isn't really proving anything yet. Where would I get excited? At this point, I probably would wait a little bit, let it clear the July high, let it clear the 50-day moving average. You get in at 72. You can risk even just to the most recent low, and there you go. So in the diet drugs, there's that. Then also, I've been looking at some of the Stratasys. I'm figuring 3D printing's got to be interesting right now. It's coming in at 1203 bid, so it's going back over that 6-month calendar range. We've been in this one, by the way, since 10/9. Yeah, I think we got in here.
It's really spiky.
It's a little bit.
Are those main like the gaps and like yesterday's action when you have a news release or something?
I don't know what the heck happened in this one yesterday. It opened up screaming and then came off. But today it's coming back in over this. So this is another one. If you look at a longer range chart, the reason why I like 3D printing is if you're going to see tariffs in steel and copper and for cars, they're already working with NASCAR on some of 3D printing some of the parts, and they certainly work with airplanes. So the thing is that would this be something that people would use? It's been costly, but when it gets more cost effective than the price you have to pay because of the tariffs, then all of a sudden it becomes interesting. So that's where my eyes are right now. CC is another one. This makes the Teflon coating for chips. I mean, it's so undervalued compared to chips, but now you can see it's starting to move. Now we'll get some resistance up here. But, this was something that had really, let me blow up this momentum chart here so you can see. It started to get positive momentum down here. Never quite cleared the 50 here, but it did here. And then once it gapped up over the 10, we started accumulating. We're still in this one. I haven't taken a profit yet. In Stratasys, I have already. But, if we can't get through, let's say, this 6-month calendar range in the 200, I'll probably start raising my stop. So I don't want to, I want to lock in as much money. But that's what you have to look for right now. If you want to look at the darling of the world, then you have to look at NVIDIA. And again, let's take a look at momentum. So momentum on the new highs did not clear the Bollinger Band, started to turn down. Now we had sort of a reversal underneath that 6-month calendar range high. Just like I showed you, you can pop out and then fail. I wouldn't be buying NVIDIA down here. I might have an interesting more perspective on it if it holds, let's say, closer to 150.
Yeah.
This is where, so that's my big lesson for today is you have to understand momentum and you have to understand how the price is reacting. And sometimes momentum leads and sometimes momentum lags.
And there's a tip from Michelle. It's not rocket science to have a 6-month range bar on your chart. So,
exactly.
And that's really important to your work throughout the interview. That kept coming up. But why draw your own when you could have the support and the narratives and the entries and the exits from Michelle and her team?
All right, last thing, because you asked me, and I'm sorry, I totally forgot about it.
It's all right.
Yeah. Okay, I like to look at TLT. I mean, because
Yeah, I do
so
too.
good to trade what you're familiar with, and I'm very familiar. So look what happened here. This thing crossed the 50 before it did in price. I
Yeah.
bought it here, got out. Then I bought it again and got stopped out on this day because I had to have some stop, and it was unfortunate. But now here we are. We're above the range. Look at where we are in momentum. We're above the 200. Look where the 200 is right here. So
Yeah.
even though this is coming in lower at 86.21 right now, which is more like down here, like
Yeah.
pretty much under yesterday's low. If it holds the 50, what is momentum telling you? The bonds have bottomed. We just now need price confirmation, and we're getting close with all this choppiness up and down, up and down. Once, this is a trend line, by the way, it's a valid one. Once this trend line clears, let's call it 87, with this momentum like this, I think you have a pretty low risk entry here in anticipation. And let's talk about that transparency, and then we can end it. The transparency of this administration, we know, what do they want?
Lower 10-year
Lower
yield.
interest rates. They want
Yeah.
it. They're going to get it one way or another, because that's how this has worked. And again, no judgy, no politics. This is just, wow, my head goes, bonds. They've been on a downtrend for a long time. One way or another, if they're transparently saying, we're going to get these rates down for you. We're going to get these rates down for you. You know they're going to. So get in before the crowd by using momentum that's really strong right now. The moving averages, which is holding, but then this trend line, which I don't use old-fashioned trend lines very much, but when I saw this one, I got excited. And over 87, you got to say double bottom, maybe.
Back to your 6-month range, I think it'll take it out. I tell you what, that when it comes to these rates, you're right. This has been the goal, and it takes time to turn the battleship around. And the
Absolutely.
bond market is a battleship.
Oh my God. And
Yeah.
and there are some really smart bond traders. I'm not a smart bond trader. I'm not a bond person. I just am an opportunist. But this on the monthly chart, this Bollinger Band, I love when I see it hold like
Yeah.
that, flip up. This is the
Yeah.
monthly chart. This is the 23-month moving average. I was so negative on bonds when I saw all of this break.
Yeah.
Now, even if you want to be a little bit late to the party, over 92, if we go back over the 23-month, basically what we're saying is on a 2-year cycle, it's flipped to positive.
Yeah. Okay. Well, this isn't going to hurt the melt up that's happening already in the market, is it?
No,
backdrop of
initially.
lower rates. So
Oh no, initially it's going to be awesome.
that's how we get 7,000 S&Ps or better with a bond market rally to 120. That should do it.
Unless we start to see, today I read that
Weakness.
the leading economic indicator is crashing at the lowest. I mean, they're looking at recessionary numbers. So the TLTs can go up and be at a lower interest rate, a good thing, but it can also be a risk off indicator if it starts to outperform the S&P. That's something else.
Yeah, and there's the one thing that I've learned in 100 years of doing this, Michelle. The stock market is not the economy. Okay,
Right.
you could have a failing economy and a blow off in stocks because of monetary phenomena.
Right, exactly. Here's my radar screen, by the way. If anybody has anything they want me to look at, I'm happy to look at it.
Okay. All right. Well, people are already thanking you. So Janet and everyone's really appreciate all the great ideas, Timothy. So why don't you let people know the best way to get involved with you, Mish? Why don't you put your website up and tell them how to go about it to find you and sign up?
Okay, well, two things. One is that, here's my market gauge website. There I am. And I write a daily 3 times a week. Look.
You're still on your radar screen.
Oh, okay. Let me move this over. Sorry.
Yeah.
Okay. So there is my
Okay.
oh, wait, hold on. So here's my daily.
Yeah.
I don't know why this is not getting bigger, but there's a daily in there somewhere where you can see how I'm thinking. Like my last one was natural gas prices, how low they can go. But I also want to show you, I am now on this platform called Slice. And I'm actually giving trades. Like, see, this was yesterday. Buy Stratasys at the market. They got in at 11.10. And already the target is 12.50. So I'm actually, I don't know if I'll stick with this, but for now, this is the only place if you want to trade with me where you can trade. So it's slice.app, no, slice-app.io/Mish. And you can always find me there as well.
Oh yeah, I was invited to join that.
I will mention that to Tomas. He's a young.
I've met him. He invited me to join.
Oh, he did invite you to join. Yeah, you
Yeah.
know, I'm giving him a chance. Who knows? I mean, it could
Yeah, I
be
know. That's the way I felt. I mean, you know, who
right.
knows, right?
I mean, at this point, there's so much fun to just trade for yourself. Right now. I mean,
Yeah.
I like him. He's 27-year-old kid. He's trying really hard to build this business of mentors that he hand selects. I'm not surprised to find out that he would ask you. I'm happy about that. And I'll let you know how it goes. Maybe it's something
Yeah.
you're interested
Yeah,
in.
you know what? Some guy with sour grapes that tried it before
I
contacted
know
me.
exactly who you're talking
Did it
about.
happen to you too?
Yes.
So I had second thoughts, and it's probably the guy in that Thomas.
I'm getting him to try to program things differently. Right now, you cannot take partial profits and you cannot tell your stop up beyond your entry price. And I told him the 2 bugs that he has to fix for traders like you and me. So, so we'll see if he does that. But anyway,
well,
that's it.
I'll tell you, the only bug you are is a ladybug. and and they're pretty, and they fly away. And this was one of the best interviews I've done in months.
Oh my goodness.
Really chocked full of pearls. In fact, there are so many pearls in this one, Michelle, that June Cleaver could have strung a necklace with all the pearls.
Oh my goodness, you're so dating yourself. Does anybody know?
I'm only. What do you mean? I'm only a young 80 years old. So anyway,
Are you
Mitch,
80, Dale?
huh?
Are you 80?
No,
No,
I hope to be, I hope to be someday.
Okay.
But I'm not there yet. A really great seeing you and talking to you, Mish. Mish is one of the
Wonderful to be
best.
here. Yeah, and I see you, what, every 3 months? So God willing,
Yeah.
we'll be.
Okay. Well, talk to you in the fall then.
Okay, thank you so
All
much.
right. Follow Mish at the minimum and at least get her. She has a free update that kind of keys you into what she's looking at, but the good stuff's behind the paywall. And you know, if you don't invest in your own growth as a trader, you'll give it to the market. So Mish will help you grow. And that's a wrap, everyone. Thanks, Mish. Remember, don't just count your 6-month ranges, count your blessings. And I'll see everyone tomorrow. Good hunting the rest of the day. Michelle Schneider, elite inner field. Thank you, Mish.
Thank you so much, Dale and Blake.
Adios.